All right, everybody, welcome to today's session. How are you guys doing? I hope you guys are doing amazing. I just want to confirm if you guys can hear me clearly. Welcome to the live trading session with Octa. My name is Ambrose. Welcome, everybody. If you can hear me, go ahead and let me know in the chat your name and where you're watching me from. You can also go ahead to share the link with your friends so they can join the session. I'm also going to do that right now. Give me a second, guys. You can share the link so that others can join the session. We're going to give 1 or 2 minutes for other persons to join, and then we'll start today's session. Once again, welcome to the Octa live trading session. All right, just share the link. All right, guys, welcome again. Good to have you guys here. And before we start today's session, I'm just going to go ahead and quickly explain, how the live chat is set up today so that everything is very simple to follow. Now, the first thing you have to note is that only the subscribers can chat. So if you want to comment, if you want to ask questions, if you want to participate in today's session, you can go ahead and hit the subscribe button. And if you just subscribed rather, give it a minute before you can type. That's absolutely normal. And there's something called slow mode, right? The slow mode is on, so you can only send one message per minute. Now, this just helps us reduce spam messages and keeps the chart very much helpful. Again, guys, this is very temporary. We're going to sort out the moderation behind the scenes, so thank you guys for being patient with us. So we're going to go straight into today's session. I'm going to run through the disclaimer and we can get started. Any opinion, news, research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as general market commentary and does not constitute investment advice. Just a brief introduction to myself. For those of you that don't know who I am, my name is Ambrose Ebuka. I have 6 years of trading experience and I've built a style that blends precision, swing trading with strategic scalp trading as well. I specialize in gold, GBP JPY, and GBP USD, maintaining over 85% accuracy that's backed by discipline and non-stop backtesting. Monday from Lagos, welcome. Hussein from Pakistan, welcome to the session. Everyone, welcome. We're going to get started. Let me just run through the agenda we have for today quickly. First, you guys know that I like to check the economic calendar, so I'm going to go ahead and do that. And we'll talk about zone trading, which is the strategy that I use. We'll review the dollar index, DXY. I'll explain what it means for you guys, for those of you that don't understand, and also its correlation with other pairs. And I'll quickly give you guys some key things to focus on this December, because it's the 4th of December. It's my first live session with you guys, and December is still pretty much starting, right? We have about 27 days in December left, even though most of these days would come with low liquidity markets. But it's important to know what you should do this December, which is why I'll talk about December resets, prepare you ahead for the new year. I would have a Q&A session where you get to ask me questions and I would answer, and I'll also get to ask you guys some questions as well. So it's important that you pay attention, because when I ask you, I'd expect you to give me an answer. The session is going to last for about 45 minutes. You can use the YouTube live chat. I can see you guys already using the live chat. Ask me your questions. I'll periodically check it to answer all of them. Once again, guys, welcome to today's session. All right, we're going to come back to the strategy, but first I would want to go over the economic calendar, and then we'll come back to the strategy that I use and how it works, and how you can also apply it to your own day trading activity. All right, now this is the Octa economic calendar. You can access this by going to the website octabroker.com, and then you want to come down to analysis and education and click on economic calendar, and it will take you to this page. Now, if you have been using the Octa economic calendar, let me know in the chat. if you've been using the Octa economic calendar, let me know in the chat. Or if you've been using any economic calendar, right? If you normally use the economic calendar, let me know in the chat. If you're trading without the economic calendar, you're not just unprepared. I'd like to tell you guys this. It feels like you're blindfolded, you know, walking into a very volatile market that's not going to give you any warnings. And then you'll be hoping your strategies and luck could, you know, do the things that discipline and you being informed would have done. Now, what I want you guys to understand, which is the real truth about the market, is the market doesn't just move because price wants to move. The market moves because information enters the system, and that information enters on a schedule, and that schedule is what we call the economic calendar. If you don't know the economic events that will be released and you're just trading blindly, you know, mainly with technical analysis, you could be caught off guard. You know, your amazing setups could be wiped out, and you just see your confidence go from 100 to 0. And that's why most beginners blow accounts. Not because they are bad traders, not because their analysis are bad, but because they did not have a clue that probably a major economic event was about to shake the entire market. You can have the most amazing setup, the cleanest setup, the most aligned structure, the strongest momentum, the perfect confirmation, and one heavy news, one high impact. It could be NFP, it could be CPI, it could be, you know, the GDP information, PPI, or whatever. FOMC can just sweep the chart in the opposite direction, and all your analysis will just get crushed in seconds. Again, it's not because your strategy failed, but it's because you did not prepare for the environment that you were trading in. And if you know, most serious traders do not ignore the economic calendar. It gives you a heads up before the market, you know, moves in the way it moves due to these economic events. It stops you from entering trades before volatility hits. And then when you see these sudden spikes, the reversals, the breakouts, by understanding the economic calendar, it explains why you have these spikes. And overall, it helps you stay calm instead of making emotional decisions, you know, deliberate, rational decisions rather, or irrational decisions, I would say. It gives you a planned system instead of just coming to the market and guessing. So if you use the economic calendar, let me know in the chat. And while we go ahead to break down the events for today, don't just look at it and say, oh, this is another economic event, trade balance or retail sales. You have to think, how does this impact the country? How does this impact the currency? If you can change that method of thinking from, oh, another economic event, buy or sell, to how does this impact the country? How will it affect the currency? It's going to shift and change your entire trading level from just making random decisions to making intentional and informed decisions and executions as well. If you're just joining, welcome to the session. This is the Octa live trading session. My name is Ambrose, and I'm going to give you guys the quick reminder for anybody that is just joining. The chat is subscriber only at the moment. What this means is you can only comment or use the live chat if you're subscribed, and the slow mode is on, so you can only send one message per minute. That way everything is kept clean, focused, and you know, you can drop your questions anytime. I would answer your questions as we go. Let me just check the comments quickly to see if we have any comments. Oh, Ahmed says that's true, that's why I try my best to stay away from the news. Evelyn says I never use the news. Well, staying away from the news is one thing, you know, but also understanding the news can also help you, you know, trade it in a good way or still stay away from it. But it's important that you understand what each economic event means and how it would impact the currency. So even if you're not trading in that moment, even if you're not trading when the news is still released, you will have an idea of what to do after the news has been released. All right. Okay. So someone is talking about, yes, Octa is still working in Nigeria. We did an upgrade to the app, but you can still access your accounts. You can use your email to log in when you want to, instead of using Google or Facebook. The plugins might be having some issues right now, but you can just go ahead and type in your email that you use to register your Octa account with the section that says email. Put in your email and password and you'll be able to log into your trading account. You can also come to the official website, octabroker.com, and you'll be able to access your account. You can see I'm logged in up here. Don't know if you guys can see that. So yes, we're going to go straight into today's economic events. Now, you guys might be wondering, why do we have just 2 economic events today? And that's because I filtered it to show me only the high impact events, right? But if you're using the economic calendar for the first time, you can add medium and low impact, just to get the knowledge, right? If I do that right now, click on apply filter, you'd see that we're going to change from just 2 high impact events to a lot of events. And you can always look at these things to know what they mean. Octa provides a definition for each event. And yeah, these are some of the things to note when using the economic calendar, the Octa economic calendar for the first time, right? So let's say you're coming to use the economic calendar for the very first time. The first thing you want to do is to make sure the time zone is set to your current location, right? So that you don't miss out on the news. As you can see, it already changed. So you don't miss out on the economic event when it's being released. All right. And then you want to look at advanced filters. Now, again, if you're a beginner trader, low impact would bring about no volatility, it's just low. Medium impact, the same thing, medium volatility. High impact would potentially bring about high volatility to the markets. I like to just keep it as high impact events. And if you want to understand anything, you can just click on the event. Octa goes ahead to explain what they mean. You can also look at the last sentence. The last sentence tells you about the influence, right? So here it says, if a steady demand in exchange for Australian exports is seen, that will turn into a positive growth in the trade balance, and that should be positive for the AUD, right? The same thing for retail sales. A high reading is seen as bullish, a low reading is seen as bearish. When I'm done explaining what these events mean and how they would impact the currencies, I'm going to ask you guys a couple of questions. So very important that you pay attention to the explanation so you can understand better. All right. Hussein says, from retail sales, you can gauge the entire economy. This is one of the signs for positive GDP. Blessing says, hi from Cameroon. Welcome to the session, everybody. Now, we're going to start with trade balance. Okay, today the market didn't throw a lot of high impact events. It's just 2 economic events, but don't let that, confuse you. Even 2 economic events can carry so much impact and so much meaning that if you understand it, then you understand how it will affect the domestic currency of that country. All right, now we have AUD, which is the Australian dollar trade balance, MOM. What is MOM? MOM is month over month. So this report is a monthly report. I hope you guys are following. So this report is a monthly report. Now, what is the Australian dollar trade balance? What does it mean? Imagine Australia is a big store, right? And then the world is the customers. When Australia sells gold, iron, wheat, meat, or any other thing to countries, it means money is coming in and they're selling, right? So money comes in, they're selling. When Australia buy cars, clothes, phones, machines, all these things from other countries, then money goes out. Stay with me, guys. When they sell gold, iron ore, wheat, meat, all those money comes in, they're selling, right? When they buy cars, machines, clothes, money goes out. Now, the trade balance checks one thing every month. Did Australia make more money than it spent? Remember, for you to make more money, you have to sell to other countries, right? Good. If the answer is yes, then it means the country is doing great. If the answer is no, it means the country is struggling to keep up. Now, the last time from the previous reports, they made 3.9 billion Australian dollars, right? The recent report says 4 3.3 billion Australian dollars, which means the store is booming, right? Remember I told you, imagine Australia was a big store that sells to the world, which means, Australia is earning more money from selling than before. The next thing you ask yourself as a trader is, how does this now, I understand how it affects or how it influences the country. I understand what it means for the country. They're selling, they're earning more money from selling. Now, how does this affect the domestic currency of that country, which is going to be the Australian dollar? If Australia is selling a lot of goods, the iron ore I told you guys about, gold, if they're selling, then foreign countries would need to pay. And when you want to pay, what do? You buy Australian dollars to pay. It's like when you want to buy something online from a Chinese website or an American website, you're debited in dollars. And for Chinese, you're debited in yuan, Chinese yuan, yeah? Even though the money leaves your account, if you're using a dollar account or an naira account, it's going to be converted. That conversion is you changing your naira for dollar. You've already bought the dollar to make that purchase. And this is for online, right? There's some people that buy offline and still change the money to physical cash and buy. So when more people are buying the Australian dollar, the price goes up. So I'm going to ask you guys a question in the chat just to confirm if you guys understood the explanation. The report came out at 4.3 billion Australian dollars. The previous report came out at 3.9 billion Australian dollars. Is this good for the Australian dollar or is it bad for the Australian dollar? Let me know in the chat. Is this report good for the Australian dollar or is it bad for the Australian dollars? Let me know in the chat. Is this report good for the Australian dollars or is it bad for the Australian dollars? Let me know in the chat, guys. I just did a very long explanation. I believe in you guys. But I mean, if you still get it wrongly, then I'll correct you and tell you what the answer is. Is it good for the Australian dollars or is it bad for the Australian dollars? Okay. Westlaw says it's good. Blessing said it's good. Hassan says it's good. And they are all correct. It's good for the Australian dollars, right? Good trade balance makes Australian dollars stronger. Bad trade balance makes the Australian dollars weaker. And when, as a trader, you look at this figure and you say, oh, the country is making more money. I trust this currency. I need to go and buy. But here are some mistakes that, traders make when trading. The news generally, but I'll just keep this to the Australian trade balance or the AUD trade balance so that you guys can learn from it. Now, the first mistake is that traders only look at the number, not the direction. It's not just the number that matters. It's whether it was higher or lower than the last time, and how high it was and how low it is from the last time. So if it improved drastically like it did now, it's good. If it got worse, it's bad. The next thing we're going to be looking at is the Euro retail sales. And for those of you that said it's good for the currency, you guys are all correct. You got the answer correctly. We're going to look at the Euro retail sales. YOY means year over year. So the report is telling you, or this report tells you, the figure that it is now compared to the same time last year. So this figure is telling you what you see here, 1%. This is what it was at October last year, right? Then 1.5% is what it is October this year. So the comparison is to last year for the retail sales. All right. Again, you can always click it to get the definition from Octa, but I'll just give you guys a deeper explanation. Retail sales is measuring one simple thing. Are people in Europe buying things? Because if people are buying clothes, food, electronics, gifts, groceries, shoes, it means that they have money and they feel confidence. If people stop buying, the economy slows down. Jobs begin to shake, shops begin to suffer, the currency also depreciates in value. The previous report was 1%. Economists, analysts expected 1.4%, and the actual came out at 1.5%. What does this mean? It means that people are buying more than before and more than expected, and Europe is doing well. So when you have strong retail numbers like this, it tells you people are happy, money is flowing, businesses are smiling, and all that. Again, when you understand what it means for the eurozone, you also need to ask yourself, how does this affect the euro itself? More spending, stronger economy. Stronger economy, stronger euro. It's that simple. When the retail sales beats the expectations, like we're seeing right now, when consumer spending increases, these things tend to make the euro to rise. And if the spending drops, euro usually falls. So I'm going to ask you guys again. The report came out at 1.5% as compared to 1% from October last year. Is this good for the euro or bad for the euro? Let me know in the chat. Is this good for the euro or bad for the euro? Let me know in the chat. If you had a shop and every day you sell goods of 1 million naira, and then after 1 year you start selling goods of 1.5 million naira, is that good for you or bad for you? And are people spending? People are spending, right? So let me know in the chat. Is it good for euro or bad for euro? Let me know. Let me know in the chat. It's good for the euro. Both are good. It's good for the euro. Michael says it's good. Blessing says yes, it's good. Adeyemi says good. Hussein says both are good. Amazing. And then when it's good for the euro, what do? You look to buy the euro, but you don't just go to your chart and you just start buying anywhere. That's where technical analysis comes in. We're going to go over to the charts and do some analysis to understand what's going on with the dollar index and other pairs as well. But just to wrap up with the economic calendar, let me know in the chat if you understood the explanation and the analysis we did for this economic events. Let me know in the chat if you understood. You see, this is how simple it becomes when someone explains it properly. Every number on the economic calendar tells you a story. It tells you a story about how a country is doing. It tells you a story about whether people are spending. It tells you a story about whether the country is earning money, whether the currency should rise or fall. And now you just understood two major stories perfectly. And all you had to do was pay attention. No big words, no big grammar, just clarity. And when you do this on your own, every time you learn and you come to the economic calendar to understand things, you level up as a trader. You become less scared. You become less confused. You become more confident, more aware. A lot of times when you face drawdowns in the markets, it's because you probably don't understand why the market moves. There is how it moves, there's why it moves. And now you're learning the why by being on this session and understanding how the economic calendar works, and that puts you miles ahead. So after this session, keep studying these events, keep asking questions, keep understanding the story behind the numbers. Every number you see here means something. And when you do this, when you keep growing like this, you won't just be a trader, you'll be a skilled trader, a confident trader. And the market tends to respect the traders that understand the story. All right? All right. Is this video accessible after the class? Yes, it is accessible. You can always come to the Octa Broker YouTube channel to rewatch the video, and whatever you don't understand, you can always ask questions in the comments. Okay, everybody understands, it's all clear. Amazing. Now we're going to go to the charts, and we're going to start with the dollar index. But before we do that, I'm going to briefly talk to you guys about the zone trading strategy, what it is, how it works, how to use it, all that. Now, the zone trading strategy consists of 4 key things. Let me know in the chat if you guys are ready. The zone trading strategy consists of 4 key things. Your understanding of market structure, which has to do with identifying the trends, if it's ranging, if it's trending, just being able to perceive the market, identifying key levels. Now, it's important to understand these things now, because when I go to the charts, I'll be using these terms, and I would like for you guys to be able to connect the dots, okay? The key levels, like areas of supply and demand, important levels like areas of areas where the market changes its character, where it breaks out, all that. And then you have to predetermine your entry and your exit points. Now, a lot of times traders open trades and then they don't know where they want to exit the trade. They just wait to make some amount of money before they close the trade. You have to realize that the market doesn't even know how much you're trading. The market doesn't care how much you're trading. It doesn't care how much you want to make or how much you end up losing. So when you decide to close a trade, you close it based on market condition. Where is the next area of liquidity? Where's the next swing? What is this candlestick telling me right now? Is this market reversing? Are the bears beginning to step in on my buy trade? That's how you think. You don't think like, oh, I'm making $200. Let me wait till it gets to 500 before I close. Who said the market is going to get to 500? What if it doesn't? So you predetermine your entry and exit points before you enter the trade, and then you also have to apply proper risk management. So what is zone trading? Imagine the market is like a battlefield between the buyers, the bulls, and the sellers, which is the bears. Now, instead of trying to predict every single candlestick, zone trading focuses on identifying the areas where the buyers and the sellers are likely to clash. And that's why it's called zones, because they're not a single price point. I'm going to show you guys in a minute. That's why it's called zones, because it's not just one line, it's a zone, as you can see here. These are all zones. I'm going to go to gold. I think I have more zones mapped out on gold. These are all zones. All right, let me know if you guys are following. So we have the demand zone, which is where buying pressure, is strong, buying pressure is kicking in. We have the supply zone, which is where selling pressure is dominant. The bears are saying it's time to sell, and price tend to drop from there. I might be wondering, how does zone trading work? You need to understand that the people that trade this market, the big institutional players, they don't place just one trade. They accumulate and distribute over zones, heavy volume areas, other block formations, sharp price reactions. And then what you're doing as a zone trader is to just follow the giants, not fight against them. So what kind of trader is zone trading suitable for? As you can see, all type of traders. If you're a day trader, you look to close a trade in the day, you can trade in the zone. If you're a swing trader, a scalper, position trader, why is it so? Why is everybody able to trade the zone? That is simply because in every single time frame you go to, we're going to go to the 1 minute. In every single time frame you go to, you can always find a zone. There's always a zone in every time frame you go to. We're in the 1 minute time frame, and I can easily spot out the zones. Breakout, can see that. I'm only using lines just because I want to spot it out easily, but here would be an amazing zone. Obviously, nice breakout, another breakout below the swing high, and a continuous rally up to this point. So if you're placing a buy trade here, you just look to the left and say, where's the nearest swing? And that will be your target on the lower time frames. I'm going to take this all off just so I don't have a lot of lines on my chart. I already have quite a number of them already. So if we go to the 5 minutes, right? Let's go to the 5 minutes. Boom. See? Zones. If we go to, remember, zones are areas of supply and demand. If you go to the 1 hour, this one is already visible. I already mapped it out. If you go to the 4 hour, visible again. I don't know if you guys can remember our session where I told you guys that gold will trade in this area for a very long time. And you guys saw how that played out, and now gold is rallying all the way up to potentially make another retest at the all-time high. But back to the session, it's suitable for all traders because you can always trade the zone in every time frame, right? When do you use it? During volatile sessions and after major news events. Volatile sessions can be when two sessions overlap, not during a news release. For example, the London session will be opened by 9 a.m. The New York session opens by 1 p.m. Nigerian time, yeah? Each session lasts for 9 hours. Now, the London session, while the New York session is open, the London session will already be open and, going, the New York session overlaps into it. Or, to make you guys understand better, by 1 p.m. when the New York session opens, the London session will still be open and would overlap into the opening time of the New York session. Now you have 2 active business hours. The same thing for the Tokyo and the Sydney session. 2 overlapping business hours. And what happens? Momentum is usually high at that time, and it can be a good time to spot opportunities. It doesn't mean that that's the only time you should trade, but when 2 businesses are active, then opportunities tend to present itself even more, right? Let me know in the chat if you guys are following. I'm gonna go back to the dollar index, okay? Let me know in the chat if you guys are following. All right, now this is the dollar index. If you know what the dollar index is, maybe when you want to place a trade, especially for those of you that trade dollar pairs, if you've ever used the dollar index before to do analysis, let me know in the chat. If you've used the dollar index to conduct an analysis whatsoever, let me know in the chat. DXY, the dollar index. The dollar index measures the value of the US dollar compared to a basket of 6 major currencies. It measures the value of the dollar compared to the euro, the British pound, the Canadian dollar, the Japanese yen, the Swiss franc, and the Swedish krona. But the euro makes up the biggest part of the index, over 50%. I think 57%. So how does it work? How does the dollar, this is the dollar index chart. How does it work? If the dollar index goes up, it means the dollar is getting stronger compared to these other currencies I just mentioned. I'm going to zoom out so you guys can see what's going on with the dollar right now. You guys can see that even though we were coming from a downtrend, you can see that over here, the dollar index is beginning to gain some momentum. It's rallying around this area, trying to break out. If the dollar goes down, it means the dollar is getting weaker compared to these currencies I mentioned. So what's really happening right now with the dollar? What's going on right now with the dollar? I'm going to give you guys some key points to take note of, right? What's happening right now with the dollar globally? So the first thing you want to notice, or you want to observe, is that the dollar is in what I would call a global tug of war. We have the weak dollar, we have the strong dollar. What makes up the weak dollar? A lot of investors have been quietly reducing how much dollars they hold. If you do your research or you Google, you find out that the global demand for the US dollar assets reduced in 2025. The US economy also showed signs of slowing earlier this year, and traders are expecting the Federal Reserve to eventually cut interest rates. What happens when we cut the interest rates? It leads to a weaker dollar because investors earn less by holding the US dollar. The dollar was off to one of its worst starts this year. This is on team weak dollar, right? Now, if you come to team strong dollar, we have the US, which is still more stable than a lot of other economies. When we have this, geopolitical tensions, when things get scary globally, investors still run to the dollar. It's still real, it's still powerful, right? And then the big players still need the dollar for trade, still need the dollar for savings, and automatically this creates demands. So it keeps the dollar from falling below this level. So what happens when you have these two teams getting stuck? You just get this. You see the market trade in a range. Nobody is dominating, nobody is losing, it's just ranging. It's like the market is in hold your breath mode. I think that'll be our number 2. That'll be the number 2. The market is in hold your breath mode. It's not really moving right now. It's in a range because the world is waiting for the next big clue. We need a hint on the Federal Reserve's next interest rate decision, next inflation reports, new jobs data, GDP updates. All these things can send the dollar shooting above 100 and maintaining that breakout or dipping below 99. Let me just go back and show you guys what the dollar is doing right now. So investors, traders, still standing still, still watching. The dollar is basically ranging right now, as you guys can see. So if you trade pairs like GBP USD, again, most of these pairs go in the opposite direction of the dollar, especially for GBP USD and Euro USD, right? So you can see the dollar is kind of rallying up, but still in a range. I'm going to show you guys what GBP USD looks like right now on the 4-hour time frame. Let's give that a second to load. Mm-hmm. While I'm waiting for that, let me just look at the comments and see if you guys have any comments for me, okay? Hope David says, I make use of the dollar index. Amazing. I have no idea why this is not loading right now. Okay, perfect. Now you can see that the dollar index in itself, it's in this range, but still recovering. As you can see, it's trying to form a bend. Let me show you guys where the dollar index is coming from. You can see all this push to the downside, and now all that bearish momentum is beginning to slow down because we are seeing the market create equal lower highs and test it multiple times, right? If you don't know where your lower high is, let me quickly show you guys where your lower high is. This is capital letters. I'm gonna take this out of here. So this is a lower high, is basically when the market creates a high that is lower than the previous high. But this, I'll call this equal highs, just because the market already failed to create and maintain these lower highs that we have here, right? Let's change this. Now, when the market creates consecutive lower highs, it's in a downtrend. But when those lower highs are not respected, they're broken above, the market begins to test previous lower highs, previous, swing highs, and then continues to create equal highs. It tells you that the bearish momentum is slowing down for the dollar. It tells you the dollar is beginning to gain some strength, and you should be prepared for a bend. But when you're trading the dollar index against GBP USD or even Euro USD and gold, you don't only trade the dollar in isolation. You don't say, oh, because the dollar is beginning to gain some strength, let me start selling gold. You also have to look, or let you start selling GBP. You also have to look what is going on with the UK economy. What is happening with the UK economy currently? Because the dollar is ranging right now, but if the UK economy is doing good, still bullish for the pound. But if the dollar is doing bad and the UK economy is doing good, bullish for the pound. If the dollar is doing good, UK economy is doing bad, bearish for the pound. Let me know if you guys are following. And then if you trade the euro as well, you don't trade the dollar in isolation. You don't just say, oh, because the dollar is ranging and we're beginning to see buy momentum, let me go ahead and sell. The euro is actually in a bit of a range right now. I don't know if you guys know what a range is. A range is when the market is not creating consecutive higher highs and higher lows. A range where the market is not creating consecutive lower highs or lower lows. It's not trending, basically. Normally, a downtrend would be something like I don't know, my network is kind of slow right now. Let's see. Okay, it's back up. So a ranging market would look something like this, right? I know that when you talk about ranging markets, you guys are used to the textbook definition. This. But in simple terms, if a market is not creating new swing highs and lows, if it's not trending, it's ranging. So you just have to find the highest point to the lowest point and just watch the market trade within that. And if you're the kind of trader that trades the bounce, you can also capitalize on it. All right, just to put that into context. So dollar is ranging right now. The euro is also ranging, even though we're seeing multiple areas where you can trade the bounce, but there's no clear trend here. We have a lower low here, and then the market went up to make equal highs with the previous lower high, and now it's even trading above, well, broke above the previous lower high, and it's trading in that zone. So you can't say this is a trending market. It's not trending to the upside, it's not trending to the downside. It doesn't mean you cannot capitalize on it. It doesn't mean you can't, enter sell positions here if you see bearish confirmation. But it's good to be aware of what the market is doing, so you can know that, in a ranging market, you don't have a lot of room for profits compared to a trending market. For example, if this market were to fall from here, you just know that the areas that you have for targets is here, 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 and ultimately here. In the trending market, when you see the market, let's say for a buy trend, when you see the market push down and you see buy momentum enter, the previous and most recent highs would be your first target, but then the market can continue to push up after that. When a ranging market, you know that you're stuck between this high and this low, and then when the market breaks below it, then you can follow up with that. Let me know in the chat if you guys are following. So if you're trading Euro USD, just give you a hint. The market is already trading at a critical key level. This is the 4-hour time frame, so it's a pretty interesting level to pay attention to, right? If we sustain the break, we already broke above this point on the Euro USD. If we sustain the break above this point, then you just know that Euro USD would most likely come up here for a retest, right? But if the market doesn't hold above this point, we're expecting touches on this zone and this zone. And the more we keep breaking, then you just know we're coming back down, just like it did here. You can see it do the same thing here. Boom, 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 come back to tap into the zone and push back up again. Which pairs do you guys trade? What are your favorite pairs? Let me know in the chat. What are your favorite pairs? Oh, I'm seeing some questions. Again, if you have questions, you can always ask me in the chat. Because I'd like to know, for example, if we get a news that is good for the currency, let's say US dollar is strong and I'm trading Euro USD, do I buy or sell the market? If the US dollar is strong from your news and you've done your analysis technically, you're looking to sell Euro. So we have something that we call, let's take this off. Let's take this off. Trying to find where I wrote. Okay. All right. We're trying. Okay. We have something that we call the quote and the base currency, right? We have the base and then we have the quote currency. Now, when you see a pair, obviously, if you think about pairs, you know that you can't call one foot of your shoe a pair. It has to be the left foot and the right foot, right? So you bring one currency, you bring another currency, commodity, cryptocurrency, whatever. When there are two, they have to, you bring one, you bring another one, you join them together, they become a pair, right? When you look at the pair, the first currency that appears is most likely stronger than the second currency. The second currency tells you whatever you see on your whatever figure you see tells you how much of the second currency you need to buy one of the first currency. In this case, I'm going to extend this so you guys can see. Let's say we have this figure right now, 1.1656. This tells you need 1.1656 euro, 1.1656 dollar rather, to buy 1 euro. Let me use one that you guys will understand. BTC USD, right? 92231. It tells you need 92,000 USD to buy 1 BTC. So whatever figure you see tells you how much of the quotes you need to buy one of the base. So when you're trading, whatever you decide to do, buy or sell, you're acting on the base currency, which means if you buy euro, you're selling USD. If you sell euro, you're buying USD. Whatever you click, buy or sell, you're acting upon the base currency. So for the person that asked the question, if the dollar is strong and you're trading euro USD, do you buy or sell? If the dollar is strong and you want to buy the dollar, it means you have to sell the base currency, which is sell euro, to buy the quotes. Let me know if you got the answer and if you're okay with the answer. Well, I see a lot of you guys trade gold. A lot of you guys trade gold. As you guys can see, gold is finding its way back up to all-time high. It's rallying all the way up. It did this here, created the highs, came back down, rallied all the way to the top, and it's been doing that. Create a high, come back down, rally all the way to the top. Now it has created another all-time high, make the nice double top, push back down, but it's rising all the way to the top again. So what is pushing gold? First, when the dollar is weak, gold becomes cheaper for people using other currencies. Gold is priced in dollars, so when the dollar weakens, gold becomes relatively cheaper for people around the world, so the demand goes up. And then we have the low interest rates. Gold doesn't pay interest, so when interest rates on savings, on bonds, when they reduce, especially when it's adjusted for inflation, people decide to hold gold because it becomes more attractive. When people are worried about inflation, economic chaos, geopolitical tensions, you can see all these conflicts we're having around, gold becomes a safe haven and people just use it as insurance. So these are some of the drivers of gold. But there are also some things that would also bring gold down as well. If the dollar gains some strength, gold tends to reduce in value. If the interest rates goes up, or the yields, the bonds, if they rise, gold tends to go down as well. 2025 has been a very interesting year for gold. It's been a big year for gold. Record highs. There's been aggressive demand for gold this year, even with the global uncertainty and the conflicts we had. It just gave gold a perfect environment to shine, right? A lot of investors, a lot of central banks are treating gold as a long-term hedge, a way to protect themselves from inflation, from the weakness of the dollar. And because of that, gold seems more stable as a long-term insurance policy. So if you're trading gold, you also have to look at the possible futures for gold, right? Especially for next year. If the dollar gets weaker, if the interest rates stay low, if there's continuous global uncertainty, gold could keep going up. If there's some major shock, maybe a geopolitical crisis or a spike in inflation, gold might shoot up hard and also make a retest at the all-time high. You have to remember that gold is not tied down by banks or inflation, or currency movements the same way that, money is. It's not tied down by that. Instead, it becomes valuable when those things begin to mess up, those currencies, those banks, inflation, all that. But let me just give you guys a technical summary on gold right now. December is always an interesting time to trade, so you have to be careful while you trade in December. It's one of the most unexpected months to trade, right? Currently, gold just made a retest at the most recent swing high, and you can clearly see that it's going back for another one, right? Again, this rally to the top side is giving you an idea that gold is bullish, right? So if you are trading gold right now, maybe you want to buy gold, a confirmation to buy gold would be a breakout of this level. If we confirm a breakout of this level and that break is sustained, it's a go and buy on gold. But if the market pulls back down, these are the areas where I'll be more comfortable to look for buy opportunities on gold, because sometimes gold like to tap into all these zones before it continues to go up. So I've mapped out the zones for you guys. You can screenshot this, but you don't want to find yourself doing anything in this area except you're a scalper. You just want to get in, get out. But over here, there's really gold is trading in the middle of this levels, and as a zone trader that I am, I wouldn't be looking for opportunities here. Instead, I'll wait for the market to get to my zones, and when it acts, I react accordingly. All right, guys, if you've got questions for me, you can go ahead and ask me your question. I told you guys we're going to talk about the December reset, right? Just something that helps you see December as a month where you reset. You know, it's the final chapter of the year, and it's the perfect time to prepare your mindset, your habits, and your discipline for the trader that you want to be next year. But some of the points I want to give you guys, I'll just quickly go over that. And if you have questions, you can ask me in the comments. So some of the points I want to give you guys for December is you have to tell yourself that the market doesn't care about the decisions you made from January to now. It's only your next decision that matters. What happened from January to November doesn't matter now. Some of you might have had an amazing year. Some of you had a tough year, but the market doesn't carry your past into December. It only reacts to what you decide to do next. And your next decision can be your turning point. December should always and also be your month of maturity. There are, like I said, lower liquidity days, holidays. You need discipline this month and not aggression. You don't need to trade like a gambler. You trade like somebody that respects the markets. You protect your account. You trade smart, because smart traders survive December. And dominating in 2026 starts with surviving December. Good habits would give you good results. Bad habits would give you bad results. If your habits are not matching your goals, your results would not match your goals. And December is the month to fix those habits. Stop over trading, stop rushing entries, stop ignoring your rules, stop trading without a plan. When you change those small habits, you'd see huge progress in 2026. All right, let's see if we have questions in the chat. Have you always been a swing trader? I've always been a day trader, right? I only recently started swing trading, I think over a year ago or 2 years ago, but I've always been a day trader. I had to add swing trading because, if I'm day trading, I look into the bigger picture, and then I just got used to looking into the bigger picture. And when you're comfortable with the analysis you've created over time, the strategy you've created over time rather, and you see that it applies on lower time frames and also higher time frames, then you can diversify. So I look at the lower time frames. I mostly trade on the lower time frames, but I do not neglect the higher time frames. So I do both swing trading, day trading, but I'm always a day trader. All right. Let's see. Any more questions, guys? I'm really confused whether price sustains or not at support and resistance levels. Well, the reason for identifying these levels is just to know that, just to create that awareness that there is a supply level here, or there's a support level here, there's a resistance level here. Whatever the market decides to do in that level, you don't care about that. All you have to do is to, like, it doesn't, when I mean you don't care about that, don't get me wrong, I'm not saying you shouldn't be focused on that, but you shouldn't expect anything. You should just create awareness, right? That this is a support level. The market usually bounces on the support level, but I want to see what the market does when it gets here. You don't just say this is a support level. If the market gets here, it's going to bounce. You can't be so sure until it gets there, right? You can only speculate. But the fact that you have these zones where the market has tested multiple times, it gives you some kind of comfortability that when the market is headed there, you now identify and say, this is what's going to happen, or this is what I expect the market to do. And I have to wait and see confirmations that the market has done it, and I trade accordingly. Please explain the trend sustainability at support and resistance level. I just did that right now. I think you asked the question earlier. You said you're confused about whether price sustains. And I'm telling you guys, the higher, if you identify the support and resistance levels on the higher time frames, they are stronger, right, than the lower time frames. The support level on the 5 minute time frame and the support level on the daily time frame are not the same. The daily time frame support levels would hold stronger than the 5 minute support time frame. But when the market gets there, you don't just start buying at support. You have to wait to see buy confirmation. Well, definitely real accounts for a beginner, just because you need to get familiar with the trading environment. Okay, first you need to get familiar with the trading environment. You need to understand your way around it. All right, so definitely real account for a beginner. You don't need to start feeling pressured yet. When you understand your way around it, you now decide which risk method is good for you. Alright guys, if you haven't already, you can go ahead and use the link in the description to download the Octa trading app. The Android app is Octa Global. The iOS app is not available right now, but you can use the web platform for now. It offers a wide range of trading instruments with low spreads, fast execution, and zero commissions. It also has various educational resources, 24/7 customer support, and a strong commitment to funds and data security. If you made it to this point, congratulations. You get to use this promo code to get 100% on your deposit. Ambrose E100. You can follow the instructions on your screen to use the promo code, make your deposit, and enjoy your bonus. Remember, when you're making your deposit and you use the promo code, there's a certain volume you need to trade before you can withdraw the bonus to your bank account or to your trading account. So be aware of that. Let's see. Do you have any other questions, guys? Any other questions? All right, guys. You can also use the QR code on your screen to give us feedback and fill out our survey. It's going to take just 1 minute. You can also use the link in the description for that. There's a link in the description for feedbacks, and just 1 minute of your time. Your feedback is very important for us to improve our future webinars, right? All right, guys, in the absence of any other questions, I'll go ahead and bring the live session to a close. If you still have questions, you can ask in the comment section. Maybe after you watch the video again, if you still have questions, you can always ask in the comment section as well, and you get a response. Thank you guys so much for joining this session, and I'll see you guys in the next one.